Hi guys, quick video to go over a bit of solidify the ideas of conviction to develop a bias, either bullish or bearish, and how you can use that to really give yourself a strong edge in directional trading. You know, when you think it's going to go bearish for solid reasons, and you're going to look for only shorts, you think it's only going to be bullish, you're only going to look for longs, etc. Um, so going over the past few days. Starting on the higher time frame, a perfect example of the last few days was on the Euro US dollar. I've turned my annotations off because I have all my inner workings of each day's annotated on, so it can get a bit distracting. But we see a huge drop and a bit of a retracement. Now this is taken directly from Inner Circle Trader, ICT concepts, but if you get a 50% fib, nothing that crazy, just a fib tool. I have mine all set up already. From the top of the move, the body of the candle, to the bottom of the move, body of the candle, we can see that this retraces to the exact 50% line, like almost exact. It was a really nice example. And we see this trend starting to form. Always air quotes when I say trend, you know, it's never going to be that strong, because I like to use trends with the idea that trends are made to be broken, and that's a good way to flip convictions or to give strong biases either way. So if we play it through, we see this trend start to come. It comes exactly to our 50% reversal point, and then we get this huge breakdown candle in the morning. Now this was in London session. This means I'm now bearish, so I'm looking for some kind. This immediately tells me my conviction is bearish, not necessarily for the whole day, but the majority of the move. It doesn't mean I'll only take shorts at this point because we're on a 1 hour time frame. Things could still change in the smaller time frames, but yeah, I think it's going to go down overall because we've broken trend on a 1 hour after a perfect 50% retracement. That's a pretty nice way to see it. So we'll go into charts. So when looking intraday, we see this trend break down here. What I'm looking for is any break of trend or energetic break of market structure, right? So at this point, I'm not looking for a continuation move. Continuations don't tend to do that well unless they have a bit of a retracement beforehand. Just it's not what I look for in my trading. So on this down move, I actually was looking for a long, kind of spoilers here. If we had a break above this trend and any, let's go even deeper here. See, we have this air quotes trend, not strong whatsoever, but this is enough for me to get the idea that I might want to look for a long if we get a stop out move. So here my conviction is bearish, right? Overall is bearish. But do I think it's going to go bearish from here? Could do, but seems unlikely. You know, you want a retracement back into to earlier levels. Liquidity swipes maybe above here, or you know, I'm looking at all these areas for liquidity swipes, and I'm fairly convinced that we will get something like that before a big move, because it just tends to be the way that it works. So I look to try and take a long. I think, yeah, right here. So this broke down, and I got in at this on the end of this candle because it closed a strong bullish candle in. Now I was looking for, this was just a 3R, my standard 3R. Even though, again, my bias is bearish, I still take the long and immediately move my stop to break even. And I was actually looking for maybe this liquidity area up here before, but that was a little bit greedy. So I think I filtered out some of my position here and then stopped out half at break even. So I made 1 or so on that trade. But the point is, this is the bullish move I expect. It's a longer term retracement on the 1 hour chart, right? If this breaks down, that's what I'm really looking for. So now we get this kind of, you know, not really a trend. It's only 2 points, but I'm looking for a break below this level, which we got, and a break below this as well. If it holds, is even better. So there, right there, I have my 1 hour chart time frame bearish bias, which is very strong bias. I have my retracement in the earlier day, a Judas swing move, also an ICT concept, and I have my strong conviction. So here I was aggressively looking for any short that I could find, and this was enough for me here. So entry wise, I took the breakdown of that candle. Aimed for 3R. Could have made a lot more today, but this was enough for me. A 3R move down to there. Kept my stop quite wide because we could have seen some more retracement. I think I actually kept my stop 100 points, 10 pips, because it looked pretty volatile. But the idea for the strong conviction coming from fractal ideas, high time frame idea of being bearish, with the idea that we'll get some kind of retracement throughout the day before we can enter, and then it happens, and then you can really take a trade with some strong conviction to be able to do it. Now that was just one example of the past few days of how we can get conviction. Many days I have no longer term bias. Like today, I had no long-term bias today at all. Like you'll see in a moment. And yet you can still trade, and you can still trade with a good efficiency, So London session comes. We're in a bit of a no man's land, we're in consolidation after a huge down move. Don't really know what's going to be coming from this point on. Definitely looks more bearish than bullish, but as I say, the continuation is risky. This thing's so overextended. I didn't want to touch it until we get some move back, and as it was so extended, I was looking for a bullish idea. So what we have is this kind of trend going down. Once again, lines don't match up perfect. They don't have to. It's been going down more red candles than green, right? Gone down a further distance than it's gone up, to put it simple. And what I look for is a break of the air quotes trend, and then the energetic change in market structure. So this is the point of being bullish. Now if this candle closes down here and starts to move lower, that's not bullish, that's a liquidity swipe, right above there. But if this holds, which I believe it did, now we're bullish, and now we can start to look for bullish setups to be able to take a long and aim for any of these liquidity levels up here. Now I don't believe I got a nice enough setup to take. I think I took one on the pound today instead, because they were moving very close in tandem, which I'll go over in another video. But what I did get today was the idea that we are bullish because we're still taking out all of these. At this point, I don't know where we are. We've taken out almost top liquidity for the day. This could go down, could go up. I have no real clue as to what was happening. I was watching this level, and this doesn't exist yet. I was watching this level for an energetic breakdown, and then I wanted to see, something like this to shoot down there. Right, that's the trade I was looking for at this point in time. So my bias was preparing to be bearish. Now we see this swipe down here, this strong move down here. And does that mean that I'm bearish? No, absolutely not, right? Because this is a liquidity swipe. Now we see price starts to consolidate back above this level. And in my opinion, sucking in shorts at this point. This is sucking in shorts. People who think that it's going to break down. But we get this swipe below to take people's stops, and sit in here. And I actually took this long instead with small size because it's not a full setup yet, but definitely considering it adding to a playbook. And yeah, I think we got that. So we never really got a strong energetic breakdown of a trend line and or a level, right? A market structure, an important level. Now, if we were to see a breakdown of this after, so in this area, if we saw a breakdown then this trade is on. Then I'm bearish as hell because we've broken down any form of uptrend that we were looking at and we've broken down market structure. So right now, bias is still flexible. You can always keep your bias flexible until those moments when it changes, you know? Here again, now we've taken out real top liquidity of the day, which is this area, and I think we get just about to this high here. Bearing in mind that the daily and 4-hour sort of general direction has been bearish for a long time. I'm only looking for shorts at this point. Longing up here is just a death wish, really. That's just it's going to be throwing money away. So I think we got, yeah. See here, if this candle goes back above and closes back above here, we're still bullish, right? Because we're getting a energetic breakdown of market structure. We've got a general idea of a trend that gets broken down and holds below. As I say, if this doesn't close and go lower and ends up here, we're still bullish. We're heavily bullish. Because that means, like down here, we've taken stops. We're consolidating above for another push higher. But we didn't get it. So by this point, I'm actively looking aggressively for shorts. And I think this was my entry. A break below this candle here. Stop was 50 points. I tend to use 50 points or 100 point stops just for ease of calculation and gives it a bit of room for any wicks that may come. But I think this trade was pretty clean. Another 3 are risk reward. But this comes from having that strong bias from a break of trend, a break of market structure that holds, doesn't close above immediately. Then we can look for price to move around, to move in the direction that we have our bias. And that was it. So today we started with no bias at all, right? We have no idea really. I mean, we're bearish at this point, but we don't want to take a bearish trade here, way below liquidity. Not in my book anyway. I'm sure it works for some traders. So we wait for it to flip. We wait for it to flip. Flips to bullish. Now, if we had a nice trade set up in here that we could have taken, we would have taken a long, taking out at these liquidity points. But we didn't. We get this fake breakdown, doesn't close below and hold below, therefore we're still bullish. And then the break of trend and market structure down to be able to take the short. Now this all comes from intraday ideas that price is always going to go from liquidity pool to liquidity pool to take all the stops, so that, you know, smart money can take the money of retail traders pretty much. So even without the higher time frames, you can still have a strong conviction either way. And that's been pretty key to my trading, to be honest. I've found the best way that I can trade is to focus 80% of my energy on what my conviction is, if I have any. Do I have a bias for long or short? And then let the setups come to you after that. So that's why I think this is all so important and a good idea to get into your head. So yeah, that was about all I have to say. Long time frame conviction, if you have it, to keep in mind to be then backed up by shorter time frame ideas. And then if that doesn't happen, you can still trade for sure. Just have to be a lot more conscious about what you're looking for in terms of forming a bias to either direction. Key things to take away from me is any breaks of trend combined with breaks of market structure, taking out previous highs. That will flip a bias and you wait for pullbacks and a setup to form. And yeah, that's about it really. That's the only thing I use. And also taking liquidity levels on either side. This is a good sign. Like when this is waiting up here, I'm being ready to have a short bias. I don't yet, but I'm being ready to have that short bias for when it comes down here. And yeah, that's it. I hope this helps, and let me know. Thanks. Bye bye.